Happy New Year 2025. This is going to be your best New Year gift. As you can see on my board, it says Forex Millionaire in 2025. So are you ready to be a Forex millionaire in 2025? Are you ready to make your first profits in Forex trading in 2025? Are you ready to make your first payout, your first withdrawal in Forex trading in 2025? On this video, I'm going to be showing you guys step by step with no step skipped on how you can be a Forex millionaire in 2025. I don't care if you just heard about Forex trading yesterday or you've been trading and you haven't found a method that is working. This video is going to be for you because I'm going to walk you guys step by step on how you can be a Forex millionaire in 2025. And I'm standing here as someone who qualifies to give you this because I have 10 years of experience in Forex trading. So I'm going to see how I can condense my 10 years of experience and give you in less than an hour or an hour video on how you can make money in Forex trading or on how you can become a Forex millionaire in 2025. So are you guys ready for us to go? Before we get into the video, I want you guys to do me one favor. Please just drop everything. Do me this favor. I want us to be able to speak life into what we want. Our words are very, 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 very powerful. All right. So I want you to take your pen and paper. Write it somewhere you can see every day. Just write I, then you put your name. For example, I'm going to use my name. I, Ndemazeah Godlove, will be profitable in Forex trading in 2025. Please write this with all confidence. Write this with all certainty that you are going to be profitable in 2025. They say words don't work without action. This is the action I'm going to be showing you. So if you write that and you believe in your heart and you follow everything I'm going to be showing you on this video, trust me, you're going to be profitable in Forex trading in 2025. So please, the exercise is simple. Just take your pen. If your name is John, John, will be profitable in Forex trading in 2025. Put the date, be specific. Put your name, be specific. All right? Please do that and trust me, put it somewhere you can be seen every day. Say it to yourself every day. Make it to be part of you. And you guys are going to watch the miracle of you speaking faith into what you actually want. I have actually experienced this and I want you guys to actually experience it as well. Speak faith into your life in 2025 and trust me, they say there is no prayer that works without action, right? This is the action. This video is going to be like 1 hour or 1 hour 30 minutes and I'm going to show you guys everything from the steps, the strategy, the tips, the tricks, the secret. So please do that for me and say it to yourself. You can put it like a screensaver on your phone where you say it to yourself every day. You can put it on your office where you see it every day. And trust me, we are going to come here next year, same time. And there are going to be many millionaires that are going to be formed from this particular video alone if you do that exercise with your heart wholeheartedly. So with that, I'm not going to take much of your time. As you can see on my screen, Forex Millionaire in 2025. It's as easy as that. We have a Forex chart right here. We have 2025, we have 2025, and then we have step-by-step guide. Step-by-step guide. We're not skipping any step. We want you to get all the steps. I want you to get all the steps, and I'm going to try to be as fast as possible so that the video shouldn't be too lengthy because I'm going to cover everything. So let's go to the first step on our roadmap. So let's go on the roadmap of the day. You can see here we have our roadmap. So I'm just going to come up with my pen. All right. So let me just put my pen somewhere here where I can easily locate. Good. So we have our roadmap, and on our roadmap, I'm just going to stand here so that you guys can see very well, okay? You guys can also see very well from here. So we're going to talk about what is Forex. What is Forex? You first of all start with what is Forex, and then what is the act of Forex trading, all right? So we're going to talk about what is Forex. We're also going to talk about what is Forex trading. Then what is traded in the Forex market, all right? Very, very important. What is traded in Forex/currency pairs. So we're also going to talk about it. Like I said, even if you just heard about Forex trading yesterday, this video is going to be for you because I'm just going to be telling you guys what works, what you need to follow, what you need to know. So pay attention and make sure you take notes to the end. I'm also going to give you guys a live example of Forex trading to make you know that you are trading Forex every day without ever knowing. All right, I'm also going to even tell you guys, maybe if you're someone who is spiritual, even Bible verses or verses in spiritual books that talks about Forex trading. So we're going to talk about a live example of Forex trading. What is a demo account? We're talking about practice. You're going to actually practice. You have to pull the trigger by the end of this video. So we're going to talk about what is a demo / live account / a prop firm account. So demo account, live account, prop firm account. Those are 3 different accounts and they all have their uses. It's not like one is more important than another. They all have their uses. Good. And then we're also going to talk about what is a Forex strategy. If you are going for war, if soldiers are going for war, what is going to help them to win on that war is their plan or their strategy. In Forex trading, we call it our strategy. So you need a strategy to tackle the market. You need a strategy to be able to win in the market. So we also talk about a Forex strategy. And then how do you transit from a demo account to a live account to a prop firm trader and to a Forex millionaire? So we're also going to be able to cover this particular circle. You can see it's like a circle. You go from here, and our goal is to make you a Forex millionaire. So with that being said, let's quickly go to the first point on our roadmap, which is what is Forex trading. All right, so if you can just see on our board, I hope you can see it very, very clearly. So what is Forex / Forex trading? So Forex, the short form for Forex is also FX. So if that's why I see many people put FX against their name, maybe John FX, Nkuchuku FX, Daniel FX. I think I'm the only one who doesn't have FX on my name because I don't fancy that thing of putting FX, this person, FX. But yes, FX is just a short form for Forex. And the name FX or the name Forex in general, this is how it came in place. You can see foreign exchange. So what is Forex? Forex is the buying and selling of global currencies. All right. Forex trading in short, no matter how someone wants to complicate it, Forex trading in short is just the buying and selling of global currency. You need to know when you go to each economy, the fuel of that economy is the economy's currency. Any economy, if we're talking about the United States, you have the United States dollar. If we're talking about Great Britain, you have Great Britain pound. If we're talking about the European Union, you have the euro. If we're talking about South Africa, where I'm standing, you have the South African rand. So you see, the currency to an economy is the fuel of that economy. And the strength of an economy is also determined by the currency parity of that economy, by the currency strength of that economy. That's why different currencies have different powers compared to other currencies. So Forex in general is just the buying and selling of global currencies. All right. Now, remember I just mentioned of foreign exchange. So is the buying and selling of global currencies or foreign exchange. All right. So that's why you see foreign exchange. And now they were looking for a shorter name to call it. So since Forex trading is just foreign exchange, you are just exchanging foreign currencies, they were looking for a shorter name to call Forex. So that's why they took FORO. You can see FORO, if you can see here, all right, FORO. So on foreign, they took FORO. You can see FORO, and then on exchange, they took EX. Can you see that? So that's how the name Forex came into play. They took FORO from Forex and EX from exchange to make the name Forex. And just to make it now again short, they just say, okay, you can also call it the FX market. Can you see? So you can call it the Forex market or the FX market, which is just the foreign exchange market where global currencies are being sold. As easy as that. Now let's come here on the comparison of Forex trading to show you guys how massive Forex trading is, right? Again, just to make you guys to have an idea of Forex trading. Remember, if you go to the New York Stock Exchange, what is being traded there is stocks. What are stocks? So stocks are just if you say you are buying a share in a particular company, you are actually buying part of that company. And when people trade stocks, they are actually trading part, they are bidding on that particular company. So in the stock market, stocks of different companies are being traded. While in the Forex market, exchanges or foreign the currencies of different economies are traded. So can you see the difference between the stock market and the forex market? In the stock market, companies are traded, or the stocks of companies are traded. Meanwhile, in the forex market, currencies of different economies are traded. You can either speculate if the currency is going to go up or down, and if you're right, you make money. That's how we make money as forex traders. So you know that's the difference. So if you come here to compare, you can see we have the Tokyo market, we have the New York Stock Exchange. This is in terms of millions, right? We have the Tokyo market, the New York Stock Exchange, we have the Asian market, and look at the Forex market. All of this is in terms of millions, 240 million, 300 million, but the Forex market alone is $6.6 trillion transactions per day. The biggest market in the whole world. That's just to tell you, you need to get involved in Forex to see. $6.6 trillion transactions every day, meaning you have importation, exportation, travel, all these things. When you go to the airport, the first thing you see is the Forex bureau. You go to bank. Banks are the big people who trade Forex, and not the retail. The people like us, we are called retail Forex traders, and we comprises just about 5%, not even up to 10%. We comprises just about 5% of everything that is traded in the Forex market. All right, I mean retail traders worldwide. Meaning, even if you are making 10 million every day, you will still just be about 5%. The big traders in the game are hedge funds, fund managers, big bank, liquidity providers. Those are the big people in the game. So that's why you see Forex trading is having what? $6.6 trillion transaction, not per year, per day. All right. Now, another one that is coming behind Forex trading is the crypto market. The crypto market is about $3.8 trillion transaction in volume per day now, but it's still behind. I mean, even crypto itself is still behind Forex trading. It's still behind Omega Forex trading. So this is just what is called Forex. And then the act Forex, I just explained, is the foreign exchange market where currencies are being bought and sold, and then Forex trading is just that act. The act itself, Forex trading, you can see, is the actual act. Is the actual act of buying and selling those currencies. While foreign just stands for foreign exchange, where those currencies are bought and sold. And the art of it is called Forex trading. Simple as that. Now let's go to the next point on our roadmap, which we're going to be talking about. We're going to be talking about what is traded in the Forex market. Very, very important. What is traded in the Forex market? Let me put it where you can see very, very clearly. So, what is traded in the Forex market / currency pairs? All right. From here, you can see we have currency. We already spoke about this, where I just told you guys that when you come to any nation, a currency is just the fuel of that particular economy. And you can tell how powerful the economy is by just knowing their currency, by just knowing the strength or their currency parity. It's as easy as that. For example, you can see currency just stands for the fuel of any economy, and that fuel is measured, or that strength is measured according to the currency exchange rate of that particular economy. So if I'm taking something like USD, it stands for something like, let me just say USD, because currencies are traded in pairs, right? So USD, you can see there are two economies here. The first economy is the United States, and the second economy is what? Is the South African economy. And then the last symbol here represents their currency, is the dollar, and the last symbol here represents their currency, which is the rand. So if I just write this USD and I put here equal to 18, as of now it's 18.1. It means for you to be able to get one United States dollar, you need 18.1 South African rand. Meaning you need 18.1, you need 18 rand to be able to get $1. Meaning the United States dollar is more powerful than what? Than the South African rand. So that's, all of this is called the exchange rate. So the exchange rate between these two economies is this. And just from this, you can already know this economy is more powerful than this. This currency is more powerful than this. Because for you to be able to get $1 US, you need what? 18.1 of the secondary currency. all right? And written like this, just having it like this, the first currencies are traded in pairs, all right? Before we come to this, let me just show you this. You can see that we have a nation and their currency, all right? And United States, USA, their currency is called what? United States dollar, and that's the symbol, USD. We have UK, United Kingdom, Great Britain pound. Their currency is called the Great Britain pound. That's the symbol, all right? We have Canada. Their currency is called the Canadian dollar. That's the symbol. We have Japan. Their currency is called Japanese yen. That's JPY, all right? And we also have South Africa. Their currency is called, our currency in South Africa is called the South African Rand. And instead, this one is ZARO. You can see each nation is having its own currency. In Cameroon, it's franc CFA, and it's just written as SAF. All right, that's the currency for Central Africa or the currency for Cameroon. So each economy has its own currency. And when it comes to Forex trading, Forex is traded in pairs, meaning you are predicting between two economies. You are predicting between two currencies. There's no way you can just go to the Forex market and you buy just one currency. No, they are always traded in pairs. This currency versus this currency versus, it's always going to be like that to the end of the world. They are always traded in pairs. That's why I just gave you guys an example here between a trade between USD ZAR, where you have what they call the quote or the exchange rate right here. The quote is when you actually have what we call the bid and the ask price. The bid price is the price you are ready to sell that particular currency pair, and the ask price is the price the person who is buying is ready to buy that particular currency pair. And the difference between the bid and the ask price is called the spread. All right, we're going to see more details about that as we go ahead, but that spread is what you actually pay the broker. So yes, you can see we have our pair right here, we have our exchange rate right here, and just from that exchange rate, we can know very well which currency is more powerful. Let me give you guys another example. Let me just put something like, okay, as we go ahead, I'm going to give you guys another example where the first currency is actually weaker than the secondary currency, and then we'll take it from there. So let's go to the next point on our list. I hope you've been able to understand what is traded in the Forex market / currency pairs. So in the Forex market, this is all what is traded is just the differential and the speculation between all these currencies. If you have now, there are fundamentals you can use to be able to have an idea whether the currency is going to go up or down, like news events, like elections, like even natural disasters. If a natural disaster happens in the United States, obviously you already know it's going to affect the United States economy. And if it affects the United States economy, it's going to be affecting what? The United States dollar. So if you were trading something like the United States dollar, South African rand, you just run and go and sell this particular currency pair because you know the United States is going to be going down. That is just making your decision based on fundamentals. You can either make your decision in the Forex market based on fundamentals. You can also make your decision based on technicals, where you just see the chart. We're going to get to what they call the chart. You will see how you can also make your decision based on what you are seeing on your chart, where you have support and resistance. You know that, okay, if the market can come to this support, there's a high probability it's going to be going up, and you buy. So you can either buy or sell based on fundamentals, which is what I just like election, natural disasters, economic indicators like interest rate, like GDP, or you can also use, some people just trade also sentimental traders. They have their sentiments, they know that, okay, from experience, at this point in time, the United States dollar used to be powerful. At this point in time, it used to be weak. So we're going to come to that, all right? So the main thing I want you guys to be able to take there is what is traded in the Forex market. Major and minor currency pairs. This is very, very important, because when you're starting in Forex trading, I will always advise you stick to major currency and major currency pairs, because they are more liquid, all right? They are more liquid, you can easily predict. If you are just starting in Forex trading and you're trying to trade exotic currency pairs, you blow your account. So let's just say you can see major, minor, and exotic currency pairs. So these are just our major currency pairs. Remember, I said from now to the end of the video, or from now to your whole life in Forex trading, we're always going to be talking about currencies in pairs, because in Forex trading, you trade Forex in pairs. There are always two pairs. Like here, you can see we have Great Britain pound, United States. So this is what we are actually trading. We are actually trading this, but you see we have two economies here, all right? And the way a currency pair or a currency is written, let's talk about the anatomy of a currency, right? Let's pick this particular one, Great Britain Pound, GBP, right? Let's just take this particular, or let's take the whole pair, GBP USD. All right, let's change our color and let's take something like even black. Let's talk about the anatomy of this whole currency pair. If you come here, the first two symbols on any currency represents the economy. So GB stands for what? This stands for Great Britain. All right, so this is Great Britain, and then the last symbol in that particular currency stands for the currency of that economy. So P stands for what? Stands for the pound. All right, so that's why the currency of Great Britain is GBP, Great Britain Pound. The same thing for the United States. The first two symbols stands for the economy. So this stands for USA. And then the last symbol stands for what? Stands for the currency of that economy, which is the dollar. Can you see? So that is the anatomy of any currency pair. That's why we're just going to be talking. You can see here, now we have the currency. When you join these two, it forms now the whole currency of that particular economy. But when you dissect it, that's how you can actually explain the anatomy of any currency pair. Now, let's continue here. Let's talk about major currency pairs. We have Great Britain Pound USD. So this is based on liquidity. Remember, in the Forex market, currencies are being measured according to major, minor, and exotic currency pairs based on how liquid they are. The more liquid a currency pair is, the more you can easily predict, the more you can make money. So these are more liquid currency pairs like Great Britain Pound USD. So this is a currency, these are all currencies and they join together to form a major currency pair. We also have Euro USD, major currency pair. We have USD JPY, United States Japanese Yen, also a major currency pair. So in short, any currency pair that is, most currency pairs that are paired with the United States dollar are very liquid and they are considered as major currency pair. And then let's go to minor currency pairs. You can see we have Great Britain Pound CHF. That's Great Britain. CHF stands for the Swiss franc. All right, we're actually in Zurich, Switzerland in 2023, and I think that's the most expensive city. I've gone to more than 50 countries, and the most expensive I've been to was Zurich. Zurich, Switzerland is very, very expensive, and this is their currency, the Swiss franc. All right, so this is also known as a minor currency pair, where you have Great Britain Pound, Swiss francs, Canadian dollar, Japanese yen, and USD, South African rand. So it's under minor. Then exotic is like USD franc CFA. All right, that's an exotic currency pair. Don't even try to predict. Don't even try to trade. And on this section, we have what we call exotic currency pairs. These are currency pairs you should never try to trade because you're going to blow your account, right? And you just have something like USD, franc CFA, that's actually USD and franc CFA, the currency for Cameroon. You have USD and the Mexican peso. You have XBT USD, like maybe USD. So those are all exotic currency pairs, and you shouldn't try to trade those ones because the spreads are even crazy. Another thing, it will be very, very difficult for you to make money with exotic currency pairs is just because the spreads are crazy. Now, let's go to the next point on our list, or the next point on our roadmap, where we're going to be talking about a typical life example of Forex trading. All right, let's talk about a typical life example of what? Of Forex trading. To make Forex trading to sound very familiar to you, I don't want you guys to feel foreign or to feel as if Forex trading is something foreign. I want you to be able to feel it. I want you to be able to make it part of you. All right, that's why I'm going to be giving you guys a typical example. Like I said, I'm the most traveled African as of now. After being to more than 50 countries, after being to almost all continents, I can tell you Forex trading is something you will see on a daily basis, whether you like it or not. Let me just give you guys a typical example of Forex trading, right? This example, I actually came up with this example when we wanted to travel to the United States, right? So at the airport, I actually went to the airport with 150,000 rand. All right. Now at the airport, we're just going to be using this as an example to make you understand Forex trading. That's why the moment you walk to the airport, just look around, you see Forex Bureau. It's always there. You see the Forex Bureau, the Forex counter, Bureau de Exchange. No matter the country you are, Bureau in French is Bureau de Exchange. It means the Forex Bureau. It means you see Forex Exchange. They just put their Forex. They put F-O-R-E-X. Even on your banking app, go on your banking app, you click on menu, you see their Forex. Meaning this is something even your bank is involved and you still think it's a scam. Guys, wake up, wake up. It's not even your bank. Go on your banking app, you see their Forex. All right. So this is a typical example. So I wanted to travel to the United States and I went to the airport with 150,000 rand. Remember, in USA, there was no way I and my family were going to use the South African rand. So I needed to enter the United States with $10,000. And in most cases, when we travel around, if you have anything which is above $10,000, you need to declare it by the custom of that country. So I didn't want to carry anything above $10,000. So I just went to the airport with 150,000 rand. That's why I see I had 100. This is me. This is Mr. Godlove. All right. This is Mr. Godlove, if that's actually how I look. But yes, I went to the airport with 150,000 rand. You can see USD ZAR. All right. And at the airport, I needed to go to the Forex Bureau to change that money to the United States dollar. And when you go to that particular bureau, you see there are different economies, there are different currencies. And when you check between USD ZAR, remember I'm changing from the South African rand to the United States. So when you check on USD ZAR, you'll be able to see the exchange rate. So assuming the exchange rate between USD ZAR was 15, meaning you just see something like this, USD ZAR, and then it will be equal to, you just see 15.1 or maybe just 15 or something. All right. So assuming the exchange rate between the United States dollar and the South African rand was 15. Now let's do the math, right? USD ZAR, the exchange rate was 15. United States vacation, right? The exchange rate was 15. And for me to get that money in the United States dollar, I needed to divide what? To divide my South African rands by the exchange rate to be able to get it in what? In the United States dollar. So I needed to divide my South African rands by the exchange rate between the United States dollar and the South African rand to get the money in dollars. And if I divide that $150,000, 150,000 rand, which I left the house, by the exchange rate 15, and then what happened? I'll have $10,000. So I was having $10,000 the first time I wanted to travel. Good. So when I had that $10,000, right, we're just using a hypothetical example. When I had that $10,000, then we were still waiting for our flight. After a couple of hours, they were like, okay, our flight has been cancelled. Well, even sometimes we used to have pilots, even we have SAA, South African Airlines pilots striking and stuff like that. So the flight was cancelled. We were not we were not going to travel that same day. So at that point in time, our vacation has been cancelled. We are not going to the United States anymore, and then I have dollars. In South Africa, there's no way I'm going to use dollars. There are some banks I can go there, but I'm going to find it very difficult for my day-to-day transactions to use dollars in South Africa. So since my vacation has been cancelled, I need to exchange those dollars back to the South African rand. Please stay with me to the end. This is where Forex is going to come in, right? This is where the beauty of Forex is going to come in. At that point in time, I need to exchange my dollars back to the South African rand. Then I just immediately ran to the Forex Bureau again. I'm like, my vacation has been cancelled. I need to change my money from dollars back to South African rand. I'm not going to travel anymore. And at that point, fortunately, the exchange rate has moved from 15 to 20. Meaning when you see USD ZAR, instead of 15, it has moved from 15 to 20. Can you see that? The exchange rate has moved from 15, remember, from 15 to 20. And the difference is just called the pips. So the exchange rate has actually moved by 5 pips, from 15 to 20. So just that differential in 5 pips. Remember, pips stands for percentage in point. So anytime we make money in Forex trading and you are being quantified according to the number of pips you've made. So just that exchange rate moving from 15 to 20, that was a difference of 5 pips. And fortunately, when I was looking at that board, I was like, damn, so the exchange rate has just moved from 15 to 20. Let me exchange it. And at that point in time, remember to convert the dollars back to the South African rand, they will need to multiply the dollars by the exchange rate. So they multiply the current. Remember, I'm talking about the current exchange rate. This exchange rate is always changing. It's always changing at all the times. You see now is maybe 20, the next time is 21, the next time is 19. So they use the current exchange rate at that point in time. So at that point in time, the exchange rate was 20, and they multiply $10,000 by 20. And what did I get? I got 200,000 rand. What did I go to the airport with? I went to the airport with 150,000 rand, and just within that 2 hours where my flight was cancelled and I had to change my money back from dollars to South African rand, now I'm having 200,000 rand. What did I go to the airport with? I went to the airport with 150,000 rand. So if I subtract this 150,000 rand from this, I just made what? I just made 200,000 minus 150. I just made a profit of $50,000 without even leaving the airport. That is Forex trading. That is Forex. I just made a profit of 50,000 rand without even leaving the airport. This sounds a little bit so cumbersome, but now for us on a daily basis, we use electronic brokers to do it online. We do it on our phones, where you can actually predict whether the market is going to go up and down on your phone, and if your prediction is right, you're going to make money. So you use what is called a broker. The broker will be able to bring this same thing, they call this quote. The broker will be able to bring the quotes right to your phone, and you can predict right on your phone. But this is just a typical example of a Forex transaction. Now let's just assume by the time we're exchanging this, the exchange rate has instant moved from 15 to 13. All right, the exchange rate has instant moved from 15 to 13. So I don't only want to use an example where I made money. I want to also tell you guys an instance where I actually lose money, because in Forex trading, you need to be able to afford to risk what you can afford to lose. Because just as I made money, I can still lose money if the market doesn't go my way, or it goes against me, I will lose money. So let's just assume the moment I wanted to convert that money, that $10,000 back to rand, the exchange rate has actually moved from 15 to 13. Remember, they will have to multiply 10,000 by 13. I'll instead be having 130,000 rand. I went to the airport with 150,000 rand, and at that point in time, I'm having 130,000 rand. I mean, I've just lost 20,000 rand. So you can either gain or lose based on your prediction. If your prediction is right, you make money, and if your prediction is wrong, you lose money. And throughout the video, my goal is going to be able to teach you on how you can be able to make the right prediction to make money at the end of the day. So I hope this makes sense. Let's go to the next point on our roadmap, where we're going to be talking about what is a demo. What is a demo account, a live account, and a pro firm account. That's a transition which you guys will all go through. Remember, we've spoken about the basics when it comes to Forex trading. And once you already know these basics, what I want you guys to sign up with now, what I want you guys to create is what they call a demo account. So a demo account is the short form for a demonstration account. So what is a demo account, or what is a demonstration account? A demonstration account is just an account that mimics the same account in a live market, but with visual money. All right. So if I put a demo account here and a live account here, the only difference between that demo account and a live account is a demo account is going to be with visual or fake money, and a live account is going to be with the real money, your hard-earned money. That's the only difference. But the prices are going to be the same. The charts are going to be the same. The market moves the same. So the beauty of a demo account is it allows you to be able to test the waters before you actually jump in. It allows you to be able to test your strategies before you actually deposit real money. So if you are starting in Forex trading, a demo account is a no-brainer. You need a demo account to test all your strategies before you can go to what? Before you can go to a live account. So demo account, which platform do you need to sign up for a demo account? Just go and download MT4. So it's just like this, just go and download MT5. That's the updated version. Go on your App Store, your MetaTrader, your Play Store, your App Store. Just search for MT5, all right? Not MTS. MT5, download MT5, and that's how you'll be able to learn how to place your trade, learn how to sell, learn how to buy. You'll be able to see everything I've just explained. You see currencies, you see currency pairs, you see the quote, you see the spread, you see the bid, you see the ask price. Everything I've just explained on the subsequent slide, you will see it on MetaTrader 5, because that's where you actually pull the trigger. So yes, go and download MetaTrader 5. After you've practiced on your demo account for a couple of months, maybe 2 to 3 months, or maybe 4 months, as long as you feel that you are confident, as long as you feel that your strategy is ready to go to live market condition, what I want you guys to open is a small live account. All right, open a small live account. That's why I'm putting here a small live account. And the key thing here is it should be something you can afford to lose. I used to always call it the AL. All right, when you're opening a small live account, it should be something you can afford to lose, because you are still learning. At that point in time, you are going to blow that small account. It's called paying your fees. I'm not being negative, I'm not being pessimistic. You are going to blow that small account because you are still learning, you are still trying to build your trading muscles, you are still trying to adapt to live market conditions. So definitely 99% of the time you blow that small live account. So when you're opening your first live account, make sure it's a small live account, and make sure it's an account you can afford to lose. So maybe it can be $100, can be $200, can be $500, can be $1,000, based on your income bracket. All right, but it should be in the amount you can afford to lose. After you've practiced on that small live account, next point now, I wouldn't advise you to depth, even if you already have a strategy which is performing very well on your small live account. What I want you to do is now you go and buy a prop firm account. Don't deposit a big amount just because now you're already making money. Now you see that the strategy is already working. I'm going to deposit $10,000. I'm going to deposit $20,000. Yes, if you can afford like $20,000 or maybe $50,000 or $10,000, you can deposit in a live account straight and go without a prop firm. But 99% of the time, the pathway from that $100 or $500, you can't just jump and deposit. 99% of people watching this will now have maybe like $2,000 or like maybe $3,000 or $1,000. I want you to buy a prop firm account, because you will only be able to make a reasonable amount of money in Forex trading if you are trading with a reasonable amount of capital. That's it. That's period. You will only be able to make something reasonable in the Forex market if you are trading with a reasonable amount of capital. I don't care about your skills at that point in time. I don't care about the experience you have at that point in time. You will only be able to make something, you will only be able to become that millionaire if you are trading with millions, if you are trading with a big capital. I was able to make almost about $400,000 in payout in 2023 and documented everything on this channel. All the videos are on this channel. Not because I was using 100,000, I was trading with almost about $2.5 to $5 million with prop firm funds across more than 5 different prop firms. So you only be able to make something reasonable if you are trading with a reasonable amount of capital. And most of you guys can't just afford to deposit $100,000, to deposit $200,000. But with a prop firm, with $500, you can buy a $100,000 prop firm account. With $1,000, you can buy a $200,000 prop firm account. So I want you guys to go and get a prop firm account. And talking about some recommended prop firm, you can check out Lionheart Funding Program. Lionheart Funding Program, you can even buy a $400,000 prop firm account, because at that point in time, you know how to trade with $400,000 with less than $2,000. You are trading with $400,000. Even if you make 10%, you'll be going home with about $40,000. So you can always check out Lionheart Funding Program, and my recommended prop firm, the link will always be on the video description. So the main goal of a prop firm is what? Is big capital. And when you're going with a prop firm, there's an approach that I've taught you guys. It's called the 50-10-50 rule. All right, the 50-10-50 rule. I think I've done an in-depth video, which you can just check the link above to watch that in-depth video. But the rule is very, very simple. I'm just going to quickly explain that particular rule. On the rule, it states that if you're buying a prop firm account, the first 50% is you giving yourself room for failure. So if you can afford to buy prop firm accounts worth $100,000, I want you to split into two and buy two $50K accounts. Because I want you, that's why here we're talking about 50%. I want you to give yourself room for failure, all right? Room for failure. Very important. Give yourself room for failure. Because I don't care your experience, you are still going to blow accounts, you are still going to fail profit accounts. Even with 10 years of experience, I still have losses. I still fail profit accounts. I'm not teaching you guys how not to have losses. No, as a Forex trader, even after 100 years, you still have losses because there are things beyond your control. When you've placed that trade, there are still scenarios you can't control. There are still circumstances you can't control. All right, but I'm teaching you how to manage your risks. I'm teaching you how to have an edge over the market. I'm teaching you how to have proper risk management so that even if you have many losses and just few winners, you'll still be a millionaire like us or like me at the end of the day. So this first 50%, you are giving yourself a room for failure. Buy 250K profit accounts. Now, those 250K, my goal is just for you to get one funded. Even if you blow one with your experience, at least you get one funded, right? The one that you've gotten funded, I want you to just target 10% and request a payout. So that's where you have the next 10%. 10% on $50,000 is $5,000. Request a payout, you're going to be getting about $4,500. When you get that $4,500, this 50% comes into play where I want you to divide this by 2 and half goes into your private brokerage account and half goes into you buying more profit accounts. So instead of buying 250K profit accounts at this point in time, if you divide 4,500 by 2, you're going to be having about 2,250. 2,250, you can buy profits worth about $200,000. So now you have two 100K profit account. The circle continues. You do this for the next 6 months, you see you're already in the millions. You're already going. People think it's witchcraft, it's magic. No, you just follow this particular system. It's as easy as that. So there's an in-depth video where I taught you guys about this particular rule. And then even here, there's a section where I call the break-even point, where if 50% of your payout is more than $5,000, then you end there. You can only, I advise you use only $5,000 at a point in time to buy more profit accounts. So if your 50% is more than $5,000, you just push the rest to your private brokerage account and you use only $5,000 to buy more profit accounts, because it doesn't make sense if you are using $10,000 to buy profit accounts. It's just going to be too much. You're going to be overwhelmed. It's just going to be too much. So just imagine you have $20,000 in payout. 50% of that is going to be $10,000. So I wouldn't advise you use $10,000 to buy more profit account. $5,000 is reasonable. $5,000 you can buy profits worth almost about, let's just say almost about $1 million. $1 million at a point in time. You see, so that's where I'm talking about the break-even point, where at that point you don't use more than $5,000 to buy more profits account. What is a trading strategy? All right, what is a trading strategy? Like I mentioned earlier, if you are going for war, the only thing that will assist you or that will help you to win in that war is going to be your game plan. The only thing that is going to help you to win in Forex trading is going to be how you plan to tackle the market. And how you plan to tackle the market is summarized under the strategy you have. All right. So that's why I'm just saying, what is a trading strategy? Trading strategy is just a set of rules. A set of rules that you follow meticulously to trade in the Forex market. So yeah, maybe your trading strategy can be like, okay, I need the market, maybe based on, maybe some people are using ICT, they're using smart money concept, they're using support and resistance, they're using moving averages. Those are all strategies. And I'm going to be giving you guys a sample, simple, profitable strategy you can start using immediately after this video. All right, in the next slide, I'm going to be giving you guys. So don't worry. Now, types of strategy. Here we have what we call scalping strategies. All right. We have what we call day trading strategies. We also have what we call swing trading. We have swing trading. All right. We have swing trading and we have position trading. All right. So types of strategies, we have scalping strategies, day trading strategies, swing trading strategies, and position strategies. The only difference between these types of strategies is the duration you hold your trade. As simple as that. The duration you hold your trade. For example, a scalper will hold a trade between seconds to up to about 5 minutes. That's a scalper. There are people who trade with a 10-second chart. You need to be, that's what they call high frequency trading. There are people who trade with even 30 seconds. Go on your MetaTrader 5, you see there's even 30 seconds there. So those are scalpers. They get in and out of the market within seconds to maybe about 5 minutes, and that's it. They take advantage of quick movements in the market. So they are known as scalpers. Then day traders, it means your trade is open and closed within a 24-hour period. All right. So if your trade is open and closed within a day, you are called a day trader. But if it goes above 24 hours, you are a swing trader. So a day trader, time frames, and most time frames, day trader will be able to use. They use time frames like the 15-minute, the 30-minute, or the 1 hour time frame, or occasionally the 4 hour time frame. Most cases, the 4 hour time frame, the trade will be able to stay more than a day. So at that point in time, you call yourself a swing trader. So swing traders, just as I explained, your trade is open and closed more than a, meaning your trade is staying open for more than a day. So at that point in time, you call yourself a swing trader. A position trader, there are some people, they place just 1 or 2 positions in a year. So a position trader places just 1 or 2 positions and capitalize on that in a year. All right, maybe he's just waiting for the market is trading on maybe the weekly time frame. There are people who trade on the weekly time frame and they just wait for the market to get to a particular level and they just buy and hold for months upon months. So those are people, those are position traders. So you can see different strategies will depend on how long you want to hold your trade. And then what are some of the few steps on having a profitable strategy? That's my goal. Remember at the start of the video, what did we say at the start of the video? Let me just take you guys back. What did we say at the start of the video? To be a Forex millionaire in 2025. And to be a Forex millionaire, you need what? You need a profitable strategy. That is why here, that's why, where were we? That's why here, what are we saying here? We're talking about a profitable strategy. So what are some of the steps? In your trading plan, you need, a trading plan is something you need to follow meticulously and religiously. All right, meticulously and religiously. Those are the key words, right? And in your trading plan, you need to have clear rules that states how you're going to manage your stop loss. So how are you going to manage your stop loss? Where are you going to place your stop loss? Where are you going to place your take profit? So here just stand, SLA in Forex trading stands for your stop loss. So if I'm buying somewhere here, there's something we call a chart, right? You have a chart like this. And if I'm buying somewhere here, I'll be able to put something here which they call a stop loss, which I'm telling the market that, okay, if this market doesn't go my way, which I'm going to accept the risk, if the market gets here, I want to get out of the trade. So you put your stop loss there. And if it does go my way, maybe I want to get out somewhere up here. So you put your take profit somewhere up here. So you see, you have your stop loss and your take profit. If the market goes your way, it's going to hit your take profit and you go home with money. But if it doesn't go your way, it's going to go against you and hit your stop loss. So that's why you see here, I'm talking about stop loss and take profit. And I have to take a minute to explain to you guys what stop loss and take profit means. So you need that as a trader. All of that will help. Both stop loss and take profit helps you to what? To predefine your risks. Very, very important. Predefine your risks. These 2 points, and also stop loss, take profit, and the percentage risk per trade will help you to what? Predefine your risks. That's why in my book, Trading in Peace, which is going to be out in this 2025, the book is going to be out in 2025. In the book, I state it very, very clear. The goal of my book is to help you to trade in peace. Many people see me on a daily basis. I'm still around. I'm still having fun, even when I'm having losses, even when the day is not, the trading day is not going as planned. I'm still happy. I'm still having a balanced life because I've been able to, my goal is to be able to help you trade in peace. How can you still be happy? How can you still be at peace with the market while making money at the same time? Or even when you are losing, how can you still be at peace? That is because one key factor in my book is talking about you being able to predefine your risks. When you are getting into a trade, the outcome of that particular trade is something no one knows. All right? Even though you've done everything, you've already calculated, you know that in Forex trading, we trade according to probabilities. The moment you click that buy or that sell button, it means there's a high probability that the market is going to go in your favor. Does it make sense? It means there's a high probability that the market is going to go in your favor. But since Trading is a game of probabilities. It means even if you were 90%, if you had a 90% probability that you're going to win, there's still that 10% probability that you might lose, all right? And that 10% is something you can't control. So you'll be able to be at peace and continue to place another trade or continue to stay long in the market, which is consistency, if you predefine your risks. You've already predefined your, and part of predefining your risk means before you click buy and sell, you've already asked yourself, how much am I risking on this particular trade? I'm pressing buy, I'm going to be risking 1% of my account. If I'm having a 100K profit account, I'm risking 1%, meaning I'm risking $1,000. And now you use, now there are calculators, there are trading calculators. Even if you go to Lionheart Funding Program, then you click on tools, go under calculators. There's a calculator that is going to help you to be able to calculate the lot size you can use so that you can only risk that particular percentage on that particular trade. You understand? So now you already know that I'm going to be risking 1%. Now, if the market goes in your way, how much are you okay to make? That's your reward. That's what they call the risk to reward. All right, RO, risk, or the risk to reward. All right, if you did like mathematics in school, you know this sign means the ratio. So what is your risk, the ratio between your risk to your reward, or just your RO? All right, so your risk to reward just measures the dollar amount you get for every dollar you risk, or the percentage you get for every percentage you risk. So if I'm risking 1%, the risk to reward I'll advise you guys to always go for is a risk to reward of at least 1:2. Meaning if I'm risking 1%, I must be going for 2%. I must be targeting 2%. If I'm risking $1, I must be targeting $2. If I'm risking $1,000, I must be targeting $2,000. Meaning even if I have a 40% win rate, meaning out of 10 trades, I have just 4 trades that are right and 6 of them are losers, Godlove is still going to be a millionaire. I'm still going to be a millionaire. I'm still going to be buying cars. I'm still going to be buying assets. Because I understand the aspect of what? Risk to reward and predefining my risk. The aspect of risk to reward, being able to predefine your risk, all of that is summarized under what we call risk and money management. Let's just take an example on the one I just mentioned where with the proper risk management of you just having a 40% win rate on a strategy which is giving you a risk to reward of 1:2, right? Let's just do some math. Let's just quickly go here. And where are we here? We are here. Let's see. Okay, I want us to just come in. Let's just come in here with an empty slide. And what are we going to do? I'm going to show you how you can still make money in Forex trading even if you have a win rate of 30%. I mean, out of 10 trades, you have just 3 of them that are right. Out of 10 trades or 100 trades, you have just 40 of them that are right. You have 60 of them that are losers. You're still going to be making money. Remember, the goal here is not to teach you guys how not to fail. It's to teach you guys how to fail like millionaires. I don't know if that even makes sense, but I'm teaching you guys how to fail like Forex traders, how to fail like Forex millionaires. Let's take our sample size. Right? Our sample size, let's take 10 trades. Right? Please come with me on this sample size 10 trades, and then our risk to reward. Remember, I already showed you guys risk to reward is 1:2, meaning for every 1% we are risking, we are going for 2%. For every $1 we are risking, we are going for $2. And then let's take our account size, right? As account size, let's just say we are having a $100,000 profit account, right? And then let's say winners. Our winners, I want us to change the color of winners. Let's just say out of 10 trades, we have just 4 winners. Just 4. So that is equal to 40%, right? And then our losers, let's say since we already have 4, we're going to have now 6, which is 60%. So can you see? We have 40% win rate. We have 40 winners and 60, or 40% winners and 60% losers. Good. So let's calculate. According to our risk to reward, right, we are risking 1% per trade. Remember, risk to reward of 1:2, and we can just say risk per trade. We can even add something here to say risk per trade. Then we add 1%, meaning we are risking 1% per trade. If we are risking 1% per trade, and we have a total of 6 losers. How much have we lost? We've lost minus 6% of our account. Can you see? We've already lost $6,000 if we are risking 1% per trade. But remember, according to our risk to reward, we are going for a risk to reward of 1:2. Meaning for every winner we have, what do we have? For every winner we have, we make 2% of our account. And how many winners do we have? We had a total of 4 winners, meaning we multiply this by 2. So we change our color. This will be times 2, which will be equal to times 2%, which will be equal to 4 times 2, 8%. So we made 8% and we lose 6%. What is our net for the day? Net for the day will be now this minus this. Our net will be positive 2%. Huh? Can you see this? This is our net for the day. I mean, at the end, there are some days you can even take 30 trades. You can take 20 trades. You can take even 10 trades in a day, right? Meaning for that day, you had 6 losers and just 4 winners. But at the end of the day, this guy is still around. They are still seeing you buying cards. They say, no, you are faking it because we saw that you were having winners you were having losers the whole place. How come you still have this money? It's simple. That guy is having a bulletproof risk money and money management in place. You can see, I still made 2%. At the end of that day, 2% of 100K, I still made $2,000 that day, even though I had more losers than winners. That's the power of risk management. That's the power of money management. That's the power of knowing the risk to reward to use. That's the power of predefining your risk. And let's just take for a situation where someone is even going for a risk to reward of 1:3. It's even going to be just 1:3. It means you are going for let's just change this, right? Risk to reward of 1:3. It means we're still risking 1%, but now 1:3. It means here we only have 3 winners. We only have 3 winners, so that's 3%. All right, we only have 3 winners and 7 losers. So those 7 losers will lost 7% of our account, and the 3 winners. Remember, for each trade we are making 3% of our account, right? We wait for a risk to reward of 1:3, meaning we're gonna make 3 times the 3 winners. We're gonna make plus 9%. So you subtract 9% from 2%, you are still up again. I mean, for that day you had just 3 winners. Just 3 winners and 7 losers. But at the end of the day, you still ended the day in plus 2%. What if you even have a risk to reward of 1:5? It means for every trade you make, you're making 5%. Mean even for just 2 trades, you bulldoze even 8 losers for that day. So that's the power of having a good risk management when it comes to trade and predefining your risk. So predefining your risk means the moment you click that buy and sell, you can walk away. You don't even need to be. There are some people when they press buy and sell, they keep opening their computer, they close. Just trading emotionally. You need to understand there are circumstances you can't control. So predefine your risk, where you're going to be putting your stop loss, where you're going to be putting your take profit, and walk away from your computer. The market will either hit your stop loss or your take profit. If you hit your stop loss, you have already accepted the risk that I'm okay to risk this particular amount. If you ask yourself, am I comfortable to risk this 1% per trade? If the answer is no, reduce your risk. You should be able to press buy and sell if the answer is yes. If the answer is yes, then it means you can walk away from your computer, because you know even if the trade doesn't go your way, you have already accepted your risk. And if it goes your way, you already have at the back of your mind how much you're going to be making. That's trading in peace. That's how millionaires like us trade. It's as simple as that. So let's go to the next point on our list, which is now a simple, profitable strategy. This is very nice. You guys can now start seeing some charts, start seeing all of this. So this is what we have on our board is called a Forex chart. In Forex trading, we have different kinds of chart. We have the candlestick chart, which is now a candlestick. A candlestick is just something like what you're seeing on the board, where you can either have a red candle or a blue candle or any color, but each candle represents a particular time frame. So if we're using the 5-minute time frame, it means this candle opening and close is going to represent a 5-minute time frame. And just talking about a candle as well, if we have a candle like this, and let's just assume this candle was actually a bearish candle. In Forex trading, there's something we call bearish and bullish, right? A bear is when the market is actually falling, all right? So you have something like this. this is going to represent a bearish candle. So why is it called a bear? Bearish is when the market is going down. This is going to be the best scenario for you guys to easily understand. Bearish is when the market is going down. And how do they call it bearish? It's because when the bear is fighting, it tramples on you. It tramples on you and it tries to push you down. It tries to smash you on the ground. That's a bear, all right? So why do we call it a bearish market? Or why do we call a red candle or a bearish candle? Or when the market is going down, why do we call it a bearish market? The explanation is simple. That's because if you see a bear fighting, the bears fight from up to down. They try to crush you. They try to smash you on the ground with their legs, all right? And now, if you see the market which is bullish, the market which is going up, they call it a bullish market because if a bull is fighting you, it goes from below to up. It goes from down to up. It tries to take you up with the bulls. It tries to do this with the horns. So it takes you from down up. So you see, so that's why they call it a bullish market. And if the market is going down, they call it a bearish market because when the bear fights, it tries to push you down. It tries to just trample you with the legs. It's as easy as that. So if you see a bearish candle like this one, which is where the market was actually going down, like this candle right here, you can see that candle is actually, this red candle was actually a bearish candle. That candle, this is how we're going to explain it, right? We'll have what we call, let's just change the color so that you guys can understand better. We'll have what we call the open price. We'll have what they call the close price. We'll have what they call the high price, meaning even before the market closes here, this is the high point of the day the market could reach for that particular day. And we also have what they call the low price. You see, so this is the anatomy of a candlestick. All right, that's the anatomy of a candlestick. And now, what if we have a bearish candle? A bearish candle will just look something like this. All right, I want you guys to understand both scenarios. So a bearish candle will just look like this, and then you have, this is called the wick. This line you're seeing here is called the wick. So let's talk about the anatomy of a bearish candle. So for a bearish candle, it means the candle, the market opens somewhere here. This was our open price. This was our close price. But before the market closes here for that day, this was the high of the day. You can see the high of the day here is instead opposite to this, because before the market could close here for that particular day, this was the highest price the market could reach, and this was the lowest price the market could reach. So this is called a bearish. This is called the bearish candle, and this is called the bullish candle. All right, remember, I'm taking it one by one. Here you're just going to be seeing different candles, but it's good we take one of it and dissect it so that you guys can understand the anatomy of each candle before now I'm explaining it on this particular strategy, because this is a strategy we're going to be using. But all these things, all these lines, these are different candlesticks. But by the time you already understand the explanation of one bearish candle and one bullish candle, by the time you see this, you already understand what's going on. It's as easy as that. By the time you see this, you already know what's going on. So after knowing our bearish candle and our bullish candle, let's now go to what they call a Forex chart, and then we're going to continue with our strategy. Good. So let's just wipe this. So up here, we have what they call a Forex chart. And the y-axis, I think this is the y-axis, and this is the x and the y. This should be the, okay, this is the y-axis and this is the x-axis, right? So this axis, this one represents what? It represents the date, because here represents the date. So here is the date, and here represents the price of that particular asset. So we are talking about, you can see here we have Great Britain Pound USD. Remember, we already spoke about what? We already spoke about you being able to do what? Being able to trade Forex in terms of pair. And the pair we are talking about here is what? Great Britain Pound USD. And we can already know that, okay, this down here it represents the date, and this particular axis represents the price or the exchange rate. Remember, we already spoke about the exchange rate, right? Meaning if this was USD ZAR, you'll be able to see 10, 15, 30, 40 going up, and the price where the current market price will be depicted on the chart. Good. That's already clear. So remember, we already spoke that when it comes to trading, we have different kinds of charts. We have what they call the line chart, where you just see something like this. We have what we call the candlesticks chart, where you actually see these candles. This is an example of a candlestick chart. And then we also have what they call, there's another chart where you just see by line like this. So that one is mostly used in tick trading. So we don't do tick trading in Forex, so we don't talk about that one. So we're mostly going to be concentrated on candlestick chart, which is this particular one. So that's why we are not talking about line charts, or we're not talking about the tick chart. So on the candlestick chart, the strategy we're going to be using here is a simple moving average strategy, and it's very, very profitable. Very, 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 very profitable. All right. And how do you use this particular strategy? I want you to go on your MetaTrader 5, right? On your MetaTrader 5, you go on under indicators, or where you can bring in your moving average. I think I'm going to leave a video up here where you can watch the detailed strategy. There you will see how you can bring in, you can put the moving average, you see how you can set it up. But just go on your MetaTrader 5. I want you to put 2 moving averages. So what is a moving average? A moving average is able to measure the weighted price of a particular asset within a particular period of time, and it will just represent it by a line. It's as easy as that. So I want us to use two exponential moving averages, and that is what is going to help us to know when to buy and when to sell. Remember, the main idea behind the strategy is to tell you when to buy and when to sell. It's as easy as that. So we need 2 moving averages here. We need the fast moving average. We need the fast moving average, and we need the slow moving average. All right. So as easy as that. So our fast moving average is going to be the 10 exponential moving average, and our slow moving average is going to be the 23. Let's just write it clearly so that you guys can see. 23 exponential moving average. This is our fast moving average, which is the 10 exponential moving average, and our slow moving average is the 23 exponential moving average. Now, when do you buy and when do you sell? You buy when the fast moving average crosses over the slow moving average from below. For example, we had a buy signal right here. All right, we had a buy signal right here where this fast moving average, you can see this one, this fast moving average crosses over this slow moving average from below. Where you had that particular cross will indicate a buy signal. All right, for example, you can see what we have here. This blue, you can interchange the colors. On this chart, this person was using the slow moving average to be blue and the fast to be red. All right, but in some cases, in most cases, you can use the fast moving average to be the blue and the red should be the 23. But in any case, so long as you understand the explanation, you can use any color, it will be the same thing. So most of the time, this one that crosses from below is this one right here. This one right here is your 10 exponential moving average. And this one here is your 23 exponential moving average. All right. So this one, you can see this one crosses over this one from below. So that's the fast moving average, which is the 10 exponential moving average, crosses over the slow exponential moving average from below. Immediately the candle closes somewhere, you'll be able to buy somewhere here. You put your stop loss somewhere here. Your take profit is 2 times your stop loss. All right, 2 times your stop loss, meaning your take profit, your TP will be somewhere up here. That's a risk to reward of 1:2. That's how you buy. You will be able to sell. Where do you get a sell signal? You get a sell signal somewhere here. You will be able to sell when your fast exponential moving average crosses over your slow exponential moving average from above. You can see this is our fast exponential moving average again, which is our 10 exponential moving average, crosses over the slow exponential moving average, which is our 23 exponential moving average from above. You can see this is the cross. So as soon as this candle closes somewhere here, we would have sell somewhere here. our stop loss somewhere here, and our take profit down here. This would have been our TP. Can you see? Two nice sweet trades would have taken already. Our buy trade would have been here, our sell trade somewhere here. And as you can see, we keep waiting. This was another cross again when the fast moving average crosses again the slow moving average from below. You would have still bought again somewhere here. You would have still bought again somewhere here, stop loss here, and then take profit here. You just continue going. That's a very simple strategy which is working like magic. So long as you have a risk to reward of 1:2, you understand your risk management, you understand your money management, you are good to go with this strategy. So this is a strategy, like I said, I'm going to leave a detailed video where you can actually learn how to use this particular strategy above. This is a strategy I want you guys to start using immediately after this particular video. And we already spoke about the strategy, and with this, you already know when to get into the market. You already know when to get, you already know when to buy, when to sell, where to place your stop loss, where to place your take profit, how to manage your risks, how to manage your money. These are the components that are going to ensure that you become a Forex millionaire in 2024. Oh, one component is still left. One component is still left, which is trading psychology. I almost forgot, sorry. One component was still left, which is known as trading psychology, which is going to prepare you again to be a Forex millionaire in 2025. Now, what is trading psychology? Trading psychology is thinking and acting as a Forex trader. Forex trading is something that is going to completely transform you. If you're someone who is indisciplined, bro, you're going to learn how to be disciplined in Forex trading. If you're someone who doesn't start anything and finish, you're going to learn how to start something and finish in Forex trading. If you're someone who doesn't stay true to a cause, you're going to learn how to stay true to a cause in Forex trading. Because in Forex trading, you need to completely redefine and change yourself to become a Forex millionaire. That's why the only book I've ever recommended for people to read, for any Forex enthusiast to read, is Trading in a Zone by Mark Douglas. That's the only book I've always recommended for anyone to read, is Trading in a Zone by Mark Douglas. That book doesn't have any strategy. Doesn't have any strategy involved. The only thing the book is going to teach you, the only thing the book is going to redefine you is to think and act as a Forex trader. Okay, ask yourself this question. Have you ever wondered why, if you see like a school of fish in the sea swimming, let's just say about 10 million sardines or fish in the sea swimming, right? If one fish wants to go right, all the other ones will go right. If one wants to go left, they all go left. They even form something like a wavy or like a motion which looks very nice. Have you ever asked yourself that question? That is because they are all in a zone. They've all seen between themselves and they are in a zone. The same thing if you have 1 million birds flying in the sky. If one bird wants to go left, you see all the other ones go like this. If one wants to go right, you see all the... That is because they are all in a zone. The same thing applies in the Forex market. There can be a point in the Forex market, you open your chart, and just looking at your chart, you know this market is going to go up. This market is going to go down. No matter what any other person tells you, you know the market is going to go up or it's going to go down. Full stop. That's it. So that is what they call trading psychology, when you've been able to train yourself to think and act with the market, to be in a zone. You are in a zone. You will only be able to be a Forex millionaire when you are in the zone with the market. You start taking what the market gives you, not what you want the market to give you. In Forex trading, write this down, very important. Trade what you see, not what you want the market to show you. Take what the market gives you, not what you want the market to give you. All right, you need to be in a zone. Be in a zone with the market. Don't try to reinvent the. You're not reinventing the wheel. You just need to be in a zone with the market. You just need to accept the risks and then know that, okay, these are the steps on me being able to make money in the Forex market. And we're just going to talk about some 11 trading psychological rules which, as a Forex trader, you need to learn. Number 1, know your strength. Very important. You need to know your strength. Knowing your strength will help you to be able to leverage from those strengths. So maybe I'm a very conservative kind of a trader, so I advise you to go for conservative trading strategy. Maybe I'm a very risky trader. I'll advise you to go for very risky strategies. As easy as that. That's why if you see my fingers will never be the same, because we all have different risk tolerances. My risk tolerance can be more than your risk tolerance. My risk appetite can be more than your risk appetite. So you need to ask yourself who you are. Are you going to be comfortable to take that amount of risk? If the answer is no, then go for conservative strategies where you not need to overexpose yourself to the market, or you not need to over-risk yourself. So that's what I'm talking about. Know your strength. That's it. Each person has his own strength and weaknesses. So knowing your strength will allow you to be able to leverage from them. Number 2, after knowing your strength, also know your weaknesses, all right? Know your strength and your weaknesses. I forgot to add that one. Your weaknesses. So knowing your weaknesses will allow you to learn will help you to learn from your weaknesses. So I used to always put it like this. Leverage from your strength and learn from your weaknesses. All right? So leverage from your strength. If your strength is to trade very well during these market sessions, leverage from it. If your strength is to trade very well during this time frame, leverage from it. But if your weakness is that you don't take too much risk, or if your weakness is that you can't place a trade without asking advice from other people, learn from that weakness. So leverage from your strength and learn from your weaknesses. Very important. Then develop confidence. So confidence just comes with experience. That's it. Even if you watch this video repeatedly for 100 times and you don't pull the trigger, you don't actually learn, you don't actually get yourself soiled, you don't actually get your fingers dirty by learning how to trade, by actually placing those trades, you're not going to be able to build that confidence. So confidence just comes with experience. All right? So confidence just comes with experience. Then know your weaknesses. So this point was number 1 and number 3 was supposed to be joined together. So know your strength and weaknesses. I already explained. You learn from your weaknesses and you leverage from your strength. So know when to take a break. Very, very important. You need to know when to take a break. You need to know when to take a balanced life. People still ask questions. How can you be the most traveled African? You've been to more than 50 You've been to almost all continents. Unless I haven't been to Antarctica. I'm actually planning to go there one day, all right? Besides that, I've been to all continents, but I'm still one of the most successful Forex traders you know. Why? Because I know how to take a break. I know how to live a balanced life. There are sometimes you'll only be able to be able to see your chart clearly and make clear decisions when you take those breaks, when you move away from your chart. Don't overwhelm yourself. Don't overwork yourself. Learn how to take a break, or know when to take a break. All right? Know when to take a break. Become self-aware. You need to be self-aware. These 2 points are almost together. Knowing when to take a break and becoming self-aware work hand in hand. You need to know when that strategy is not more obsolete, or that strategy is obsolete. You need to know when the strategy is obsolete. You need to know when the strategy is not more working, when to make small tweaks. All right? Don't jump from strategy to another. Pick one strategy, stick to that strategy and practice it. It's only when you have enough data for that strategy that you'll be able to actually make money. So don't hop from strategy to strategy. Then learn to change. Again, it just comes from, remember all the points, they're trying to interlink from one point to another. So after you become self-aware, learn to change. They can become a point where the strategy that was working in 2023, there's no guarantee it's going to be working in 2024. A strategy that was working yesterday, there's no guarantee it's going to be working tomorrow. The Forex market changes like a wind. So if a strategy becomes obsolete, or if a strategy is no more working like it used to do, learn to change. Learn when you need to be able to learn to make those particular tweaks or to make those particular changes so that the strategy can continue to work. Control your environment. If you're someone who is just getting into trading and you see that your environment is not going to help you achieve that particular goal, if the worst comes to the worst, you can live like what I did. Back in 2018, I left my home country, Cameroon, because of Forex trading. I left Cameroon, now I'm resident and I live in South Africa, and I left Cameroon purposely because of Forex trading. Because in Cameroon, there was no way I could easily deposit funds. There was no way I could easily withdraw my funds. There was no way I could easily do Swift transfer. So just to tell you guys the desire I had to be able to be one of the best in Forex trading, I had to leave my home country. I had to leave my family. I had to, even though now this is home, but back then I had to leave everything just to pursue that particular career which I love so much. So learn how to control your environment. Speak with people who live around you. Make them to be able to understand that you are getting to. Or if the worst come to the worst and you see that talking to them is not going to change everything, keep it private. Don't even tell people you are a day trader. Let them just see the results. Results speak louder than words. All right? Results speak louder than words. The results is the highest. There's a if you are successful, results are going to show. So there's no reason for you trying to explain to people that you trade. When it even comes, the best advice I can even give you, if you are getting into Forex trading, don't even tell people you are day trading. They'll just think you are a scammer. They'll just think you are scamming people, all right? Just keep it in private and let the success make the noise. Let the success make the noise, because 90% of people will try to talk you out of it. 90% of people will try to tell you, go get a real job. 90% of people will try to tell you they are disappointed in you, because after learning all these things in the university, this is what you are wasting your time doing. You are doing this thing behind the computer every day. They'll be disappointed in you, not knowing that the highest person who can see your vision the way you can see it is you yourself. So better keep it to yourself and know that 90% of people will try to talk you out of something which can make you a millionaire, out of something which can change your life. Then deal with stress. Forex trading is one of the most difficult, or Forex trading is arguably one of the most difficult and the most stressful career you can think of. But the stressful the career, the more profitable it is. All right, I'm not telling you it's going to be easy. No, it's not going to be easy. But it's going to worth it at the end of the day. All right, it's not going to be easy. But if you learn everything I've taught you guys on this particular video, you go through my channel, you practice everything I've taught you guys, trust me, there is light at the end of the tunnel. There's going to be time I'll be able to watch you the same way you're watching me. Give your testimony to say, no, you never gave up and this is where you are. You never gave up and your life changed. So I'll have to tell you this. Keep pushing. There's light at the end of the tunnel. It's not going to be easy. I'm not standing here and I'm telling you, no, I don't sell people dreams. I'm not selling you a dream. I'm not selling you hopes. No, I'm not taking your hopes too high. It's going to be difficult, but it's going to worth it at the end of the day. At the end of the day, you'll be able to hit your chest and say, yes, I'm glad I took this particular path because this has changed my life. From 2014 right up to 2018, I think I lost almost about $34,000 in Forex. I was calculating about a few months ago. Back in Cameroon, $34,000 is about 60 million francs. That's a lot of money that I was taking from my businesses and putting in Forex trading. I lost everything. But today, in one trade or in 1 hour of trading, in 2024, in 1 hour of trading, there are days I used to make $40,000. In one day. That's more than what I lose throughout 3 years of learning how to trade. So there's never a point in time or even think of what I lose again, because now it has just become like history. That was when I saw that. That was at that point in time where I used to blow that money. I saw light at the end of the tunnel, which is the same vision I want you guys to have. There will be a point in time you will just think of how much you lose when you are trying to trade and you just laugh over it, because that same amount you can make it in a day, you can make it in an hour. So my friend, my brother, my sister, my good friend watching this video, keep pushing, because there is light at the end of the tunnel. I can see it within you that you are going to make it in Forex trading. I can see it more than even you see it within yourself that you are going to be a profitable trader. You are going to be one of the best traders we have out there. So keep pushing, and I'm here. My channel is here to help you get to that particular point. Number 9, pinpoint your emotions. Very, very important. Don't involve emotions when it comes to trading. And when you trade without involving your emotion, when you've removed the monetary attachment to that particular trade. That's why I used to tell people a monkey can be a better trader than you, because a monkey doesn't have any monetary attachment to that particular trade. If the monkey was actually risking his bananas, then he wouldn't be able to trade. But since he doesn't have his bananas on the line, he's risking money. He doesn't care about that money. He doesn't even know what it is. He's just executing what he has on his trading plan. If his trading plan tells him that buy at this particular point in time, he's buying and he's not second guessing. But as a human, even when your strategy or your plan tells you that buy at this point, you start asking yourself, what if this trade doesn't go my way? This is my last money I'm risking. What if there's a news event? What if so you start second guessing because you have emotions involved. You have monetary attachment to that particular trade. In forex trading, you even make a lot of money sometimes when you don't even need the money. You make a lot of money sometimes when you don't have any monetary attachment to that particular trade. You are just busy meticulously and religiously placing your trade without even worrying how much you're making. That's when you know that you become a profitable trader, because you are just busy, you are just concentrated on executing what is on your trading plan, and the money is just following naturally. So that's why I'm talking about pinpoint and understand your emotions. Learn how to control your emotions when it comes to trading. The last point is develop a routine. Very, very important. Develop a routine. What do I mean by you developing a routine? A routine is when you know that, okay, I need to be trading from this particular time to this time. According to my 9 to 5, I will advise you guys, when you are starting in forex trading, even when you become profitable, never go all in forex trading. Please never go all in, where you just abandon everything and say, no, okay, now I'm just going to focus in forex trading. Because the moment you make that mistake, remember, at that point in time, you know that you need to make that money to survive. You need to make that money to pay your rent. You need to make that money to maybe pay your school fees, or maybe to buy groceries or pay your electricity. You are trading under pressure. You're squeezing the forex market to provide what the market can provide. At that point in time, it will become very difficult for you to make money. So don't get to that point in time where you are trading under pressure because you need to survive. No. Always do forex trading as a side. Always do forex trading as a secondary something. If you are starting in forex trading and you don't have a 9 to 5 job, or you don't have a business, or you don't have something which is self-sustaining you, I'll advise you, first of all, go and look for something which is self-sustaining you. Something you can always fall back on before you are trading forex. Because you're just going to become overwhelmed and give up if you make that mistake to just say, okay, I'm going to borrow this money from my girlfriend or from my wife or from my husband, invest in the forex market, then I'm going to make profit, pay them back. Bro, even the little you have will be taken away from you. You're never going to be able to pay them back. Don't follow all these charlatan gurus on the internet that tell you that just borrow everything. You're not going to be able to make it back. I'm telling you guys the truth. So always have something you can fall back on before you are trading forex. Always have something, even if that account is not there, you can always fall back under your business, under your 9 to 5 job. Go look for a 9 to 5 job if you don't have a job yet before you are trading for even just 30 minutes or 1 hour a day on forex trading is enough. It will still get you to that point where you become a forex millionaire. So develop that particular routine and understand that you should never make a mistake to abandon everything and just go all in on forex trading. With that being said, voila, we've come to the end. So make sure, as always, you subscribe to the channel. Make sure you like the video, all right? Make sure you subscribe to the channel. Make sure you like the video. Make sure you comment, and make sure you share with a loved one. Share with at least 2 people, guys. Don't keep this to yourself. Share with at least 2 people that you want to be able to make money in the forex market together with them in 2025. And as always, I'm glad I could present this to you guys. I'm glad you guys had the patience to watch to the end. Just you watching this video to the end, that's the first step, bro. I'll have to, if I could give you a handshake, I'll have to personally give you a handshake, because that's just the first step. The dedication on you to sit and watch to the end and take notes. You should be able to clap for yourself, because that's the first test you've already passed. That's the first step of you being a forex millionaire in 2025. And please continue to do the assignment I gave you guys by the start of the video, which is you writing it down. I, John Nkuchukwu, whatsoever your name will, write your full name. I, John Nkuchukwu, somewhere will be profitable in Forex trading in 2025. Be specific. Say that to yourself every day, and God is going to help you. The universe is going to help you, whatsoever you believe with, and it's going to happen. All right? Even your brain is going to put everything in place that will make that goal to come into fruition. And if you've gone through this video to the end and you want me to mentor you one-on-one, you want me to be able to teach you Forex trading A to Z, you want someone to be able to hold your hand, having a mentor in Forex trading is very, very, very important. When I started in Forex trading, it took me 2 years without a mentor, and after I got a mentor, it was just now the last year and I was profitable. So 3 years, 2 years without a mentor, and then 1 year with a mentor and I was profitable. So you need a mentor. Who is a mentor? A mentor is someone who has already done something you want to do. A mentor is someone who has already gone through a circle you want to go through. The person will help you go from point A to point B faster than you trying to figure out everything on your own, because the person has already committed all the mistakes, has already committed all the errors, and it will just show you what is working. So if you want me to mentor you, check out Godlove University, which has received many awards as the best Forex institution. So you can check out Godlove University, where you enroll with more than other 5,000 students on our private Discord community, and you also go through a course that will be able to drill and prepare you to be a Forex millionaire. I'm talking about Forex trading. Forex automation is something we saw about 5 years before what it is today. So if you want to use Patrex Pro, which is one of the most viral and the most profitable Forex robot out there, you can also check the link on the video description. Very, very important, my Telegram community. That's where I share free tips. That's where I stay in contact with you guys mostly on a daily basis. It's totally for free. My Telegram community is for free. So make sure you check the link on the video to join my Telegram community, so that you can be in a community of more than 50,000 traders sharing ideas on a daily basis. And remember, when we were going through the video, we spoke about brokers. We spoke about you having a platform. So make sure you trade with the same brokers I'm trading with. So check the link on the video description to sign up with my recommended brokers, so that you can be able to trade with the broker that will pay you when you actually make the money. And again, when you actually start talking about a prop firm and you want to use a prop firm that can give you almost about $600,000 in funding, check out Lionheart Funding Program. All the links are on the video description. Check out the videos that are going to be coming at the end of the screen. And if you haven't subscribed, make sure you smash this button right here to subscribe to the channel, and see you guys on these other videos, and see you guys at the top.